So picture this. You are an emergency medicine physician. You've been doing 24-hour shifts in the ER, intubating drunk drivers at 3 a.m., telling families that grandma's not going to make it, and getting punched in the face by meth patient on a Tuesday. The whole beautiful catastrophe in the ER. And after that, you go home and you decide, you know what? I want to be a filmmaker, a musician, and a blogger, and a digital asset mogul. And I'm going to start a film production company and I'm going to call it Songswell. Now, here's where things get fun. So, you tell the IRS that you spend 200 to 300 hours a month on this side hustle while also working 120 hours a month in the ER as an ER doc. Let me do the math for you because I'm a physician and I love numbers that don't add up. That is 420 hours of work per month. There are only 720 hours in a month. So this man is telling the federal government that he's awake, productive, and billable for 58% of every single hour, including the ones where normal humans are asleep, eating, in the bathroom, pooping, peeing. So today we're dissecting Sherman versus Commissioner Tax Court Memo 2023 63. This is a case so instructive that I want every physician and dentist and chiropractor listening to this to pull over and take notes if you're driving. Actually, no. If you're driving, keep driving. That's why this podcast exists. So let's go. So, our patient today, and yes, I'm going to call him a patient because by the time the IRS was done with him, he really needed resuscitation. And his name is Dr. Joseph William Sherman. Dr. Sherman, a real guy, real physician. He graduated med school in 1984, licensed in Washington State. In 2015, that's the tax year in question, he was working emergency medicine at a federal facilities in Arizona, 12 to 24-hour shifts, sometimes 48 hours straight. Man, some of you guys been there. I've been there. Man, that's brutal, right? So now Dr. Sherman had a backstory. So his father ran a music school. His brother is a professional guitarist and he grew up around music. So he learned guitar in college. He even played gigs to pay for med school back in the 70s and 80s and getting paid in cash, by the way. No documentation, which sort of becomes a foreshadowing moment we'll come back to. So far, this is beautiful story. A Renaissance man, doctor by day, musician by night. I love it. The IRS loves it too, but for completely different reasons. So here's where Dr. Sherman makes the first incision in the wrong direction. So in 2015, he claims that he launched a business called Songswell. And when the tax court asked him what Songswell actually was, his answer was, and I'm paraphrasing the court records here. So, well, it's a film production company and also a website that owns copyrights and also a blog and also a digital asset company. And also, I act in it. And I also do custom design and write scripts. And also, I built the server it runs on. So, listen, guys. When a patient comes to your ER, tells you that they have chest pain, abdominal pain, headache, pain in the left pinky, and they think they have a Lyme disease, also COVID and long COVID, todo body dolor. What do you think? You think this person doesn't actually know what's wrong with him or crazy. And neither did Dr. Sherman about his own business. So, okay, let's put Songswell on the exam table. Here's what Dr. Sherman reported on his Schedule C for Songswell in 2015. So, income, zero, nada, not a dollar, nothing. Expenses, listen up, $104,000. He bought an Alexa mini camera for 51 grand. So that's not the one that Amazon makes. That's actually a cinema grade camera used to shoot actual Hollywood movie, the big square thingy. And he also bought $19,000 in accessories for it. He also bought editing software, gimbals, custom enclosures, motherboards, and the works. So total operating loss was about 104,000 bucks, which, surprise, surprise, happens to be just about exactly enough to wipe out his physician income for the year and brings his tax bill down to roughly zero. Now, here's a diagnostic question. And I want you, doctors and dentists and chiropractors, listening to this to think like clinicians for a second. So, when you see a business that has zero income, ever, has no business plan, isn't licensed in any state as far as anyone can tell, has no books or records, whose owners can't tell you when it started, whose expenses conveniently zero out the owner's W 2 income, and whose owner already has a six-figure day job funding all of it, what is your differential diagnosis? The IRS and the tax court reach for the same diagnostic tool that we would reach for, which is Section 183 of the Internal Revenue Code, affectionately known as the hobby loss rules. So the Section 183 says, basically, if you're not running an activity for profit, you don't get to deduct your losses from it against your other income. So you can't take your expensive hobby and use it to shelter your real job's income from taxation. The IRS lets you have fun. They just don't let you write off the fun. So think of it this way. If a chiropractor wants to take up competitive bass fishing on weekends, that's great. That's wonderful. Go catch fish. But you don't get to deduct your $80,000 bass boat against your adjustment income because it's not a business, it's a hobby boat. And the tax court doesn't just eyeball this stuff, right? They run a 9-factor differential. It's literally a checklist found in Treasury Regulation 1.183-2B. And I want to walk you through how Dr. Sherman did on each one, because this is the part that matters for you. So if you have a side hustle, a medical device idea, real estate venture, or YouTube channel, or Botox and filler practice on the side, and a podcast, the IRS will run the same 9-point exam on you if you ever start showing losses. So pay attention. So factor number one, are you running it like a business? Do you have a books, records, business plan, license, separate accounts, all of that? Dr. Sherman, zero business plan, no license, no books. Most receipts didn't even match what he reported. So fail. Factor number two, do you or your advisors have expertise? When the court asked who his expert advisors were, he said, the guy at the camera store who sold me the equipment. That's not an advisor. That's a salesman. That's a huge difference. So fail. Factor number 3, time and effort. Remember our 420-hour month? The court called this his testimony, and I'm quoting here directly because it's beautiful, self-serving and at times lacking in credibility and candor. So translation, judge thinks he's making it up, BSing. So fail. Factor number 4. Will the assets appreciate? Cameras and computer, they depreciate and lose value. They're not like a vintage wine. So fail. Factor number 5. Have you done this successfully before? So playing guitar at a coffee shop in 1981 to buy some ramen noodle does not count as prior business success. So fail again. Factor number 6. History of profits. No profit ever, just losses. So fail. Factor 7. Occasional profit, still no, fail. Factor 8. Other income sources. So Dr. Sherman made $143,000 as a doctor. The Songswell losses just happened to wipe that out. So the court called this factor weighs heavily against him. So fail. I mean, flatline fail. Factor number 9, personal pleasure. So music and film and blogging, things that he literally grew up loving, the court basically said, like, bro, this is your hobby, and you know it. He failed again. 9 for 9, all failed. No ambiguity, no zebra here. This is a horse, and the horse name is you owe taxes. So, but wait, Songswell was just one part of the case. So Dr. Sherman also tried to deduct $52,000 in medical practice expenses on a separate Schedule C. And the IRS only allowed about $10,000 of it, so 1/5. Why? Same reason, no substantiation. So let me read you the categories he tried to claim. But because as physician, we need to talk about this. So advertising of $3,000. But when judge asked, hey, why does an ER doc need advertising? And I want you to picture this in your head. Dr. Sherman said, sometimes you need to promote yourself. I'm like, I'm sorry, promote yourself, brother? You don't have patients. You have whoever the ambulance drops off. So the ER is not a customer acquisition funnel. There's no Yelp campaign for best doctor to suture your face after a bar fight, right? And insurance, $9,000. Again, no documentation. Henry admitted he was just estimating it. Office expense of $8,000. It turned out that he rented, it's a rent money on his apartments in California and Washington, not an actual office. And travel and meals, $24,000. Again, no receipts. License fees, CME, and laundry, $4,000. Mostly no documentation. So this is a man who walked into tax court with the story and walked out with a big tax bill. The court held that even if he could document his expenses, he still failed to prove that the expenses were ordinary and necessary to his medical practice. That's a second lesson buried in this case, and it's a huge one for you guys. Substantiation is necessary, but it's not sufficient. You can have the receipt, but you still have to prove that it was ordinary, which means common in your profession, and necessary, which means appropriate and helpful for your practice. So a receipt for a $51,000 professional cinematic camera is just a receipt. It does not make the camera deductible. One more thing. Dr. Sherman didn't even file his 2015 tax return on time. So IRS had to prepare a substitute for return for him in 2019, 4 years late. And his excuse? He was waiting for a corrected 1099 miscellaneous. You can't even make this up. So court response was essentially, that's not how any of this works. An alleged lack of records does not relieve a taxpayer from an obligation to file a tax return. So on top of everything, he got hit with failure to file penalty and failure to pay penalty under 6651A 1 and 2. Two separate penalties, stacked. It's like a medical malpractice claim with the board complaint riding shotgun. So let me give you guys 4 lessons from Sherman, surgical and clean. So lesson 1, hobby with the Schedule C, taped to it is still a hobby. So if you have a side passion that's losing money year after year while conveniently sheltering your medical income, the IRS has a name for that. And it's not entrepreneurship. It's a Section 183 hobby loss rules. Lesson number 2, run it like a business or don't deduct it like one. Business plan, separate bank account, books and records, licensed entity, real advisor, not the guy at B&H photo. So if you can't show a profit motive, you can't really take the loss. Lesson number 3, substantiation is necessary, but is not sufficient. Even with receipts, every business expense has to be ordinary and necessary for your specific practice. So an ER doc deducting advertising is going to get a raised eyebrows. But a dentist deducting a yacht as a client referral vessel is going to get even more than that. Lesson number 4, file your return on time. Even if you can't pay, even if you're missing a 1099, the failure to file is 5% per month, up to 25%, and it stacks with the failure to pay penalty. So here's my final thoughts, and I want you to sit with it, okay? Dr. Sherman wasn't a criminal. He didn't hide cash. He didn't run a offshore trust. He didn't do anything that would get him a Department of Justice press release. He just got aggressive. He got greedy and sloppy. He convinced himself that his weekend hobby was a legitimate film studio. He tried to use the IRS as a co-investor. So the lesson for us, physician, dentist, chiropractor, is that we are targets. We have high income. We have complex lives. We have side gigs. We have legitimate businesses and not so legitimate ones. And IRS knows it. The good news, if you do this right, the tax code is extremely generous to healthcare professionals and entrepreneurs like us. Section 179, bonus depreciation, retirement plan, legitimate side business related deductions. That's a fortune to be saved legally. So we'll cover all of this. But it starts with not being Dr. Sherman. So I'm out. I see you at the next one.